Okay, so let me ask you something. Have you ever checked your bank account and seen it sitting at like $47, maybe gotten hit with an overdraft fee that dropped you into the negatives, and then somehow, your bank still managed to charge you a monthly maintenance fee? Yeah, me too. And here's the thing that really gets me. While you're sitting there with literally not enough money to buy groceries, your bank is making money off of you. Not despite you being broke, because you're broke. That sounds insane, right? Like, how is that even possible? Well, that's exactly what we're going to break down today. Because the way banks actually make money is not what most people think. And once you understand this, you'll never look at your bank account the same way again. My name is Joe, and I spend way too much time thinking about how the banking system is literally designed to profit from people who can least afford it. If you're someone who's ever felt like the financial system is rigged against you, or you're constantly wondering why you can't seem to get ahead even though you're trying to do everything right, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because look, I'm going to show you the exact math behind how banks turn your financial struggle into their profit margin. And more importantly, I'm going to show you how to stop letting them do it. So here's what most people think. The bank holds my money, and that's basically it. Maybe they use it for loans or whatever, but my checking account? That's just my money sitting there. Wrong, your bank account isn't a storage unit. It's a product. You are the product. And that product is generating revenue in at least 7 different ways that I'm going to walk through. Now, you might be thinking, okay, Joe, but I don't pay my bank anything. I have a free checking account. Do you though? Do you really? Let's do some math. The average American, according to a Bankrate study from 2024, pays about $340 per year in banking fees. But here's where it gets really interesting. That average is heavily skewed. Because if you're someone who maintains a high balance, you probably pay close to zero in fees. Which means people with lower balances are paying way more than $340 to bring that average up. In fact, a report from the Financial Health Network found that low-income households pay nearly 10 times more in banking fees than higher-income households. We're talking about people paying $600, $700, sometimes over $1,000 a year just to access their own money. Let me say that again. If you're broke, you're literally paying more to be broke. But fees are just the beginning. That's the obvious stuff. Let me show you the 6 other ways your bank is making money off you right now, even if you think you're avoiding fees. Let's start with the big one, overdraft fees. Here's how this works. You've got $50 in your account. You buy coffee for $4. You grab lunch for $12. You pay for parking for $8. All good, right? You're at $26 left. Except, here's the thing most people don't realize, those transactions don't always process in the order you made them. Banks can actually reorder your transactions from largest to smallest. So instead of processing that $4 coffee first, they process a $40 charge that was pending from 2 days ago. Boom! You're overdrawn. Now that coffee? Overdraft fee. Lunch? Another overdraft fee. Parking? Another one. 3 transactions, 3 fees of $35 each. That's $105 in fees on $24 worth of purchases. And this isn't some rare occurrence. The Consumer Financial Protection Bureau found that banks collected over $8 billion, with a B, in overdraft fees in 2024 alone. The average person who overdrafts pays around $250 per year just in these fees. But here's what really makes me frustrated. The people paying these fees the most are the people who can least afford them. We're talking about people living paycheck to paycheck who overdraft because they're trying to pay rent, buy groceries, keep the lights on. The bank knows this. They know you're struggling, and they're charging you $35 for being $2 short. Now you might be thinking, okay, so I'll just avoid overdrafting. Problem solved. Cool. Let's talk about minimum balance fees. Most banks require you to maintain a certain balance to avoid a monthly maintenance fee. That fee is usually around $12 to $15 per month. The minimum balance? Usually somewhere between $500 and $1,500. Here's the math on that. If you can't keep $1,500 in your account, you're paying $12 a month. That's $144 a year. But let's be real about what this actually means. If you're someone who's living paycheck to paycheck, keeping $1,500 in your checking account isn't just difficult, it's basically impossible. That's rent money. That's grocery money. That's my car broke down money. So the bank is essentially saying, if you're too poor to keep money in your account, we're going to charge you for being poor. The psychology here is wild. Because $144 a year might not sound like much to someone with money. But if you're making $30,000 a year, that's 0.5% of your annual income just to have a bank account. Okay, so we've covered fees. But here's where it gets really interesting. Even if you somehow avoid every single fee, you never overdraft, you maintain the minimum balance, you're doing everything right, your bank is still making money off of you. How? Your deposits. Look, when you put money in a checking account, the bank doesn't just let it sit there. They use it, they loan it out, they invest it, and they make money on it. Here's a specific example. Let's say you keep an average balance of $2,000 in your checking account. Your bank is paying you what in interest? Maybe 0.01% if you're lucky? That's 20 cents a year. Meanwhile, that same bank is taking your $2,000 and loaning it out at, let's say, 7% interest for a personal loan. That's $140 a year they're making off your money. You get 20 cents. They get $140. And this is completely legal. This is literally how banking works. But most people have no idea this is happening. According to the FDIC, the average interest rate on savings accounts in the US is about 0.46% as of early 2025. Meanwhile, the average personal loan rate is around 12%. That spread, the difference between what they pay you and what they charge borrowers, that's where banks make a huge chunk of their money. We're talking about billions of dollars in profit from the interest rate spread alone. Now, every time you swipe your debit card, your bank is making money off that transaction too. Here's how. Merchants pay what's called an interchange fee every time you use your card. It's usually around 1.5% to 3% of the transaction. You buy $100 worth of groceries? The bank gets somewhere between $1.50 and $3 from that grocery store. Now, you might be thinking, okay, but that's the merchant paying, not me. True. But here's the thing, those costs get passed on to consumers through higher prices. The Economic Policy Institute found that merchant fees add about $427 to the average household's annual expenses through increased retail prices. So indirectly, you are paying for this, and your bank? They're collecting these fees on every single transaction you make. The average American makes about 150 debit card transactions per year. At $2 per transaction, that's $300 your bank is making just from your spending. Let me guess, you've used an out-of-network ATM before, right? Here's what happens when you do that. The ATM owner charges you a fee, usually around $3. And then your own bank charges you another fee, usually another $2 to $3, for using an ATM that isn't theirs. So you pay $5 or $6 just to access your own money. The average person who uses out-of-network ATMs pays about $72 per year in these fees, according to Bankrate. But here's what makes this even more frustrating. ATM fees are incredibly cheap to process. We're talking pennies. The markup on these fees is insane. Okay, so let's say you set up automatic payments for your bills, rent, utilities, subscriptions, whatever. But you miscalculated. You thought you had enough in your account, but you were off by $20. That payment bounces. And your bank charges you a returned payment fee, usually around $30. And then, and this is the kicker, the company you were trying to pay also charges you a fee for the return payment. Another $25 to $35, so you're out $55 to $65 because you were $20 short. This is where it gets really interesting from a psychological perspective. Because these fees create a negative feedback loop. You're broke, so you can't pay your bills, so you get charged fees, which makes you more broke, which makes it even harder to pay your bills. It's a trap. And banks know it's a trap, but they have no incentive to change it because it's incredibly profitable. Now this one most people don't even think about. Your bank tracks every transaction you make. They know where you shop, what you buy, how much you spend, when you spend it, and that data? That's valuable. Banks aggregate and anonymize this data and sell it to marketers, advertisers, and other companies. While they're not selling your personal information directly, that would be illegal. They're selling insights derived from millions of customers' spending patterns. This is a multi-billion-dollar industry, and you're not seeing a penny of it. Let me put this all together for you. Let's say you're someone making $35,000 a year. You're living paycheck to paycheck. Here's what you might be paying annually: overdraft fees, $250, minimum balance fees, $144, out-of-network ATM fees, $72, return payment fees, $60, indirect costs from interchange fees, $427, that's $953 per year. Almost $1,000, if you're making $35,000, that's 2.7% of your income going to your bank just to access and manage your own money. Now compare that to someone making $150,000 a year with a $10,000 average balance. They're probably paying close to zero in fees. They might actually be making money if they have a high-yield savings account. The system is literally designed to extract wealth from people who have the least and redistribute it to, well, to banks. Now, you might be wondering, why is it set up this way? This seems deliberately predatory, and look, I'm not going to sit here and tell you there's some evil conspiracy, but I will tell you this: banks are businesses, they exist to make profit. And they've figured out that the most profitable customers aren't the rich people with tons of money, it's the people who are constantly struggling, constantly triggering fees, constantly borrowing. There's a term for this in the industry: fee harvesting. Banks know that low-income customers generate more fee revenue, so they design products and policies that maximize those fees. The reordering of transactions? That's not an accident. The high overdraft fees? That's not an accident. The minimum balance requirements? Not an accident. This is by design. And here's the really messed up part: banks spend millions of dollars lobbying against regulations that would limit these fees or protect consumers. They fight tooth and nail against any changes to this system because it's so profitable. Okay, so I've probably made you pretty frustrated by now. Good. Because that frustration should motivate you to actually do something about this. Here are the specific steps you can take today, not tomorrow, not next week, today, to stop letting banks profit off your financial struggles. Step 1. Switch to a no-fee bank or credit union. There are banks and credit unions out there that don't charge overdraft fees, don't have minimum balance requirements, and actually pay you decent interest. I'm talking about online banks like Ally, Marcus, or credit unions in your area. The difference is real. I moved my money to an online bank 3 years ago, and I went from paying about $200 a year in fees to paying zero. That's $600 I've kept in my pocket over 3 years. Step 2. Set up account alerts. Most banks will let you set up text or email alerts when your balance drops below a certain amount. Set the threshold at like $100 or whatever makes sense for you. This is a simple way to avoid overdrafts. You get a text, you know you're running low, you don't spend money you don't have. Step 3. Opt out of overdraft coverage. Here's something most people don't know: you can actually opt out of overdraft coverage. If you do this, your card will just get declined if you don't have enough money. Instead of triggering an overdraft fee, yeah, getting declined is embarrassing, but it's a lot less expensive than a $35 fee. Step 4. Use cash for budgeting. Look, I know this sounds old school, but hear me out. If you're someone who struggles with overdrafts, take out cash for your weekly spending. When the cash is gone, it's gone. You literally cannot overdraft with cash. Step 5. Build a buffer. I know. Joe, if I had extra money to build a buffer, I wouldn't be broke, fair. But here's the thing: even $100 in your account as a buffer can prevent hundreds of dollars in fees over a year. Start small. $10 a week. That's $520 a year. That's enough to avoid most overdraft situations. Here's what I want you to understand: this isn't about individual choices. This isn't about just being more responsible with money. The system is designed this way. Banks profit more from people who are struggling than from people who are wealthy. That's just a fact, but understanding that doesn't mean you're powerless. It means you need to be strategic. You need to understand how the game is played so you can stop losing it, because here's the truth: every dollar you pay in banking fees is a dollar you could be using to actually build wealth, to invest, to save, to get ahead. Banks are counting on you not knowing how this works. They're counting on you just accepting fees as a normal part of life. Don't give them that. Look, I get it. Money is stressful. Banking fees feel like just another thing on a long list of financial problems, but this is one you can actually fix. You can switch banks. You can change your habits. You can stop paying hundreds of dollars a year just to access your own money. And when you do that, When you keep that money in your pocket instead of handing it over to some massive corporation, you're not just saving money, you're taking back control. So here's what I want you to do. After you finish watching this video, go check your bank statements from the last 6 months. Add up every fee you've paid, every overdraft charge, every monthly maintenance fee, every ATM fee. Look at that number. Really look at it, and then ask yourself, is your current bank worth that cost? If the answer is no, it's time to make a change. If you found this helpful, make sure you're subscribed because I break down this kind of stuff all the time. Next week, I'm going to show you exactly how credit card companies are making money off you even if you pay your balance in full every month. Trust me, you're going to want to see that. Hit that like button, drop a comment letting me know what your biggest banking frustration is, and I'll see you in the next one. Stop letting banks profit from your struggle. You deserve better than that.